All right, I think we're recording. What's up, everyone? This is Dino and Brian from Sentiment coming to you with an impromptu video in an impromptu setup. We're back to our Google Meet instead of trying to do all bells and whistles on OBS, just so we can record this video as soon as possible because the market is going crazy. There was a large corrective move today that has seen Bitcoin fall down to as low as I believe 42.9K at one point before rebounding slightly. Ethereum is also down. In general, it seems like a market-wide correction. We're still sort of looking into exactly what seems to have caused it. The general consensus or the latest consensus so far seems to be that it was mostly, events off-chain, derivatives in particular, over-leveraged positions that are sort of ruining the party for everyone in a cascading correction throughout the day. What we want to focus on is exactly what this type of a corrective move has done to Bitcoin's on-chain and social metrics, and in fact, talk about the fact that Bitcoin has remained relatively, the Bitcoin's network activity has remained relatively normal throughout all of this, and in fact, that we might be even seeing a few positive signals or potentially bullish signals in Bitcoin's on-chain data and in the on-chain data of stablecoins in particular. So, Brian, I think you're sharing your screen already and showing us two exchange-related metrics for Bitcoin. You want to start us off by telling us what we're seeing in terms of potential sell-side pressure for Bitcoin as far as on-chain data is concerned?
Yes, indeed. Thanks, Dino. So what we're looking at right now is the exchange flow balance of Bitcoin, which is the difference on an hourly, I've got it, on an hourly basis between the exchange inflow and the exchange outflow. When there's a massive spike up like this, that means there is a big difference in the amount of inflow compared to outflow, and vice versa. When you have a negative spike, it's a big difference between the outflow versus inflow. Generally, the positive spikes which are related to inflow, are bad for crypto because it means that coins are moving onto the exchanges with the likely, or at least presumption that they are going to be sold in some way. Coins moving away indicate they're being moved to safety and there's less risk of a sell-off occurring. You'll notice a lot of these spikes occur as the supply of exchange goes up, and then when you see these big balance spikes downward, that's an indication that the supply on exchanges is also moving downwards. So a lot of correlation there, and really what we've seen, Dino, is mostly good news for Bitcoin here, and here, with a larger amount of outflow than inflow on these days, followed by the latest big spike happening about 2 weeks ago. A week and a half to 2 weeks ago. And this indicated that there was a massive inflow of exchanges. We had not really much price action. It did decline after that, followed by a nice rise, but there wasn't a ton of difference. We did have a little bit of volatility here, but nothing compared to this. And I often like to look at the last spike, whether it was indicative of bearishness or bullishness here, or bearishness here, as an indication on what's next. And this bearish spike was the last thing we saw. And that's my take on it. Why don't you let me know what you've seen?
Right. So, as far as what happened since the correction specifically, it doesn't seem, this is what I was coming to, it doesn't really seem like the on-chain data has made, it doesn't seem like the correction has had a major impact on Bitcoin's exchange-related data in particular. So, as Brian is showing here, exchange flow balance, which is essentially the net flow of Bitcoin moving to and from exchanges, it is slightly into the positive today, but nothing out of the ordinary. So yeah, there's a little bit of fundamental inflows to exchanges, but nothing that doesn't happen on a good day for Bitcoin anyway. So there doesn't seem to be regardless of this major correction, so far we are not seeing a network-wide effort to offload from Bitcoin holders to offload their bags. And in fact, the supply of Bitcoin on exchanges has stayed flat throughout this entire ordeal today. So overall, it doesn't, basically on-chain data does not show any clear signs of panic sell-offs across the entire network. Now, we are seeing a little bit of weekend sell-offs, and Brian, probably the best metric to show that would be network profit loss, right? So network profit loss is a metric that essentially tries to to calculate the overall ROI of all daily transactions on the Bitcoin network, happening on the Bitcoin network. So the way that we calculate this metric is for each unit of Bitcoin that moves on the blockchain, we take the price at which it was last moved, and we assume this was its buy price or acquisition price. And then the next time that that same unit of Bitcoin moves on the blockchain, we take the price at which it was moved, and we assume that this was its sell price. So obviously, this metric makes a fair few assumptions, but it's a generally good gauge of relative investor sentiment and whether holders on average are moving their coins at a profit or at a loss. And as you can see today, no surprise, we are seeing a first dip in Bitcoin's net profit loss since essentially the start of August, and the largest dip in Bitcoin's net profit loss since the beginning of July. So what that means, very simply put, is that on average, the coins, the units of Bitcoin that are moving today on the blockchain, especially after the correction, are moving at a loss relative to the last time that they moved on a blockchain. So this would suggest that there's a fair bit of weekend sell-offs in particular, holders that are moving their coins potentially to sell in fears of further corrections. Now, if you look at previous times that Bitcoin's net profit loss has dropped like this, it hasn't actually been that bad of a sign for its future price action, at least its short-term price action. So several of Bitcoin's local bottoms, first starting with the one on May 21st, were earmarked with this major drops in Bitcoin's net profit loss, which essentially pointed to weekend sell-offs, a little bit of panic in the market, and assuming enough buy-side pressure, something that bulls can very easily absorb. Now, speaking of bulls in particular, and whether we can find any types of signs of potential buy-side pressure from today's events. What I like to look at, Brian, is what's happening with the exchange inflow of stable coins. So let's start with USDT, and let's lock the price of Bitcoin and look at the exchange inflow of Tether, the largest stablecoin at the moment still. And let's see what has happened with the availability of Tether on exchanges over the last 24 hours. So what Brian is showing here is the supply of Tether on exchanges as well as the exchange flow balance of Tether. Essentially, both of these metrics have seen a pretty significant rise today, suggesting that the amount of Tether, and this is ERC20 Tether, moving to exchanges or available to exchanges is seeing a major uptick. Now, some on-chain analysts believe that when there is a significant inflow of stablecoins to exchanges, this could suggest a potential buy-side pressure, so sort of an opportunity or a decision of large stablecoin holders to buy the dip. And in fact, Brian, if you maybe zoom out to the last maybe 1 year of data, I think we can see several times. Yeah, we can also look only at the exchange flow balance just to kind of make it a little less noisy. Yeah, so you can remove the supply on exchanges. There we go. So we can also see a pretty significant spike in the exchange flow balance of Tether right there on May 21st. So as the correction has has occurred, and as we were reaching that local bottoms, that was the first time that we saw a major move of stable coins, in particular Tether, to exchanges, suggesting that there might be at that point in time a propensity to buy into the dip. So the fact that we are seeing a similar event today could be an indication that some holders that seem to have missed the first wave of this new leg up are now looking to buy into Bitcoin at a discount. Now we are seeing a similar thing for USDC, especially when you look at USDC's exchange inflow. There is a relatively high spike today. Yeah, let's look at USDC's exchange inflow. There we go. So that's that's exchange flow balance moving into the net flow.
Yeah, I'll do inflow.
Yeah. The net flow is also moving slightly into the positive, and then exchange inflow is also sort of in the positive direction. Both of these metrics suggesting that moving to the upside, suggesting that there is also a relatively significant amount of USDC also moving to known exchange wallets. So two of the biggest stablecoins seemingly showing a propensity to be moved to exchanges over the last let's say 8 hours, suggesting that there might be a desire by these stablecoin holders to exchange them for more volatile cryptocurrencies. Obviously remains to be seen, but this is what we're seeing in terms of potential signs of buy side pressure. Now, Brian, another thing that we might want to look into, especially now that Bitcoin has had this pretty major correction, is what this has done to Bitcoin's MVRV ratios, right? Do you want to show us the Bitcoin's 30-day and 365 MVRV?
Yeah, let's combine those together. So MVRV is essentially the measurement of the average trading returns based on the time frame that we're showing. So in this case, we're showing 30-day here and 365 days here. I'll maximize the screen once again. Ignore the fact that they're on different axes, and we'll look at them one at a time here. So the 30-day MVRV, generally speaking, if it gets to double digits, 10% or above, especially 15% or above, that's a sign that it's beginning to get a little overbought and people are profiting too heavily. The thing with MVRV is no matter what the time frame, whether it's 30 days, 365 days, 5 years, 1 day, it's always going to average 0% because it's a 0% sum game. And even if there aren't the same amount of winners or losers, there are the same amount of returns going positive and negative by averaging all trades together. So 30-day here is indicating that here, when things were really starting to skyrocket, we were getting up to 20+% MVRV. And at the time of the drop, we were at a modest plus 9.2%, 9.3%, which is more of a risky time than usual. Even though it wasn't up here, as people were kind of, buying the tops and selling the bottoms in order for the MVRV to come down despite price rising. Even though we were down here, it was still higher than most of what we had really seen since March, because back during May, June, July, when it was dip by time, that's when you really want to get in, because these are the least risky times because other traders are underwater at that time.
Yeah, might be
And
a
you'll
good
notice
idea
right
to,
here.
sorry, Brian, might be a good idea to zoom out to like last 3 years of data, just so we can show people exactly how high Bitcoin's MVRVs got recently and where they are right now. Because I agree with you that like at the 9 or 10%, it's not necessarily a danger zone, but historically speaking, it seems like the 30-day MVRV ratio for Bitcoin has a tendency to peak at around 15 to 20%, right? That would suggest that
Mhm.
at these points in time, the short-term holders seem to like to take some profits, right?
Yeah, you can consider the major spike up here at 40+% kind of an anomaly. I mean, it happened one other time, and these are basically when the all-time highs happen, and all-time highs should not be considered to just happen every single week or every single month. But generally speaking, we look at around the 9-10% range. We had a big drop off here when it was at 9%. It took a few days, but it eventually got down. This was a pretty sizable correction for the time, going from 12K down to 10.1K. So, lost a sixth of its value or so. More over here, 9-10%, big drop down. This, of course, is kind of related to Black Thursday here, so take that with a grain of salt. But yeah, you can see plenty of times where we immediately corrected once we were in the double digit territory or 9-10%, give or take territory. So 30-day wise, I think it continues to be a pretty reliable metric. And most importantly, as I highlighted here, look over to the very far right. I'm going to go back and highlight it, but look at the far right where I just was, and you'll see that after this big dip, it actually dropped into negative territory,
Yeah.
which is a good thing, meaning if you buy now, it's less risky than usual. Go ahead, Dino.
So, in general, the way that MVRV ratio works, so as Brian said at the start, what it does is it shows the average profits of a certain group of traders or holders based on on-chain data. So, once again, it does make some assumptions, but in general, the way that people use this metric, the way that on-chain analysts use this metric is the higher the MVRV ratio is, the more there are unclaimed or unrealized profits by holders, and the more likely it is, or the riskier it is, to enter a trade, because the more likely it is that holders are going to start claiming those profits and applying sell side pressure. So before this correction, Bitcoin was at about, the short term MVRV ratio was at about 10%, which means that on average, the profits of short-term traders, all holders that have acquired or all addresses that have acquired Bitcoin in the past 30 days, were at about plus 10%, right? So historically speaking, at about plus 15 to plus 20%, that's usually the time where it seems like Bitcoin's MVRV ratio tends to peak, and there's a potential or an increased risk of a short-term correction. And then the lower the MVRV ratio gets, the more opportune time it could be to accumulate, at least according to on-chain analysts. So with this latest correction, Bitcoin's MVRV ratio is once again into the negative. It's obviously not near sort of all-time lows, but it's certainly, let's say, healthier than it was a week ago. Even though nobody really likes a major correction, it is worth pointing out that it has moved Bitcoin's MVRV ratio back into a negative territory, at least on a short-term scale. So for short-term traders, they are now sort of on average slightly underwater, which is a decent place to be for another move upward or for a swift recovery, right? And then as far as the long-term MVRV ratio is, Brian, where are we now? Where were we before the correction, and how low did we get afterwards?
Yeah, let me zoom in a little bit because it might have to be a little more granular for the 365 day. We'll go just the last 3 months here. I'll take off 30 days. So we were at 30.7% at the time that the big drop happened, and now we are sitting at 17.3%. So we dropped a whopping 17.4% or so on the 365 day, or 13.4, I should say, on the 365 day MVRV ratio.
Right. So overall, the long-term holders of Bitcoin are still on average. So all addresses that have acquired Bitcoin in the previous 365 days, they're still about 17% in profit or on average. However, this is, as Brian has shown a minute ago, on a 3-year scale, this is still far from bull cycle highs, allowing further room for the price of Bitcoin to appreciate before we hit these levels at which both short-term and long-term holders seem to like to take some profit. So in general, even before this correction, we weren't really at a stage where, historically speaking, according to MVRV ratio, Bitcoin holders liked to take profits. This is why I'm saying, from an on-chain perspective, it doesn't seem like this current correction was triggered by anything on-chain. It seems like it was largely due to over-leveraged longs. So one last thing, maybe, Brian, to show as far as Bitcoin's on-chain data is concerned, is what the reaction of large Bitcoin addresses has been. So usually what we like to look at is the behavior or the combined balance of addresses that are holding between 100 Bitcoin and 10,000 Bitcoin. So that's quite a range, but in general, we find this to be a fairly helpful gauge of what the sort of Bitcoin whales are doing, and whether their combined behavior points to accumulation or distribution, right? So as you can see here on a yearly scale, this is what we're showing right now is the total amount of Bitcoin that is held by addresses that are holding between 100 and 10,000 Bitcoin over the last year, shown as a percentage of Bitcoin's total supply. So currently, these addresses, these large millionaire addresses, hold 48.8% of Bitcoin's total supply. And as you can see, between October and mid-May, there has been a major accumulation spree. They have acquired, I believe there was about 150,000 Bitcoin or more that they have acquired in that time span, suggesting or sort of giving further support to this idea that the start of the Bitcoin rally was, propelled by institutional interest. Then, as we sort of hit the all-time high for Bitcoin, the collective balance of these addresses has started to decline, suggesting that they are starting to move into a more of a risk-off behavior, take some profits, retreat a little bit. Between the May 13th all-time high and the end or the bottom of the correction there, we saw about 60 or 70,000 Bitcoin move away from these addresses, which suggested a lack of confidence by these large holders in Bitcoin's short-term or future price action. Since then, however, the move has, or the trend has, flipped on its head back to accumulation, and even with this latest correction, at least for the time being, our data is not showing any sort of massive or dramatic changes in the behavior of large addresses. I think they have mostly remained stagnant throughout the last week. They have began the week 7 days ago. They were at 9.19 million in total in terms of the collective holdings, and today they are still at 9.19 million. The last I checked. So basically, regardless of this latest correction, we are still to see any sort of massive or major dramatic move by large Bitcoin holders. They are more than content sitting on their backs. It doesn't seem like they're panicking, and obviously, large addresses are one of the key stakeholders of Bitcoin's price action, and one of the key stakeholders that have an impact on Bitcoin's price action, and by proxy on the rest of the crypto market. So overall, Brian, I would say that from an on-chain perspective, we're really not seeing a major impact that this correction has made on Bitcoin. The only thing that we can say is interesting is, number one, the fact that net profit loss is now moving into a negative for the first time in a while, suggesting that there are some slight sort of weekend sell-offs, which could actually be positive for Bitcoin's future price action. And then we're also seeing an uptick in the amount of stable coins to exchanges, which could point to stablecoin holders looking to move their coins to exchanges in order to exchange them for possibly Bitcoin and Ethereum. In other words, buying the dip. Anything to add, Brian?
No, nothing here. I think you covered the whale behavior quite well. We're sitting at about, even right now, sitting at 48.9%. It got to as high as about 49.2%. So give or take, they're only holding 0.3% less supply than they were at their peak here on July 29th / August 10th, where they equaled that amount. But unless we see a sizable drop like this would be the warning that there could be a big drop coming. But break even or flat behavior really means there's nothing concerning going on as far as whales, and they're holding strong with their coins. Therefore, we can feel safe with that fact in mind, at least.
All right.
Um,
One last thing, maybe, Brian, to show is what's going on the social side of things, right? So,
sure.
with Bitcoin now experiencing, I think, the biggest correction in 4 months, the question is, what is the social atmosphere around the top coin? So, there are several metrics that sort of help us look into that. And, Brian, maybe show or sort of switch the interval from 12 hours to 4 hours, just so we can see it a bit more in high res, because it's only been about 8 hours since the crash. So the two metrics that we're going to look at here is, number one, we're going to look at social volume, which essentially shows the amount of mentions of Bitcoin that we have collected from over 1,000 different crypto-related social media channels. So here at Sentiment, we collect data from a variety of Telegram groups, crypto subreddits, Twitter accounts, and other social media channels in order to sort of give you an idea of how the chatter or discussion about a particular coin coincides with its price action. And so no surprise here, we are seeing a pretty, as Brian is highlighting right now in blue, we are seeing a pretty significant uptick in the amount of mentions of Bitcoin on crypto social media over the last sort of 8 hours. Definitely suggesting that the retail crowd is more than aware of what's happening with the top coin and with the rest of the market. Now, Brian, if you maybe, I guess people can see it, but might be a good idea to close off social dominance for just a second, just so we can see it a bit more clearly what happened at previous times. There we go. That Bitcoin social volume became or got this high. So as you can see throughout the correction, starting in May, right, there have been several similar spikes in Bitcoin social volume, and especially when you move into June. So there's one there at the June 20th, and then one before that around June 9th. Both of these coincided with local bottoms for Bitcoin. So this is something that we see every now and again, where there's a major spike in the amount of chatter around Bitcoin, suggesting that people are becoming, first of all, slightly scared, and in general, more than a bit aware of market conditions. Previously, or historically speaking, when Bitcoin corrects and we see a spike in social volume, it seems to coincide with a formation of a local bottom and short-term price recovery, right? The other thing that we can maybe look at, Brian, is social dominance for Bitcoin. Essentially, what this metric shows us is what is the amount of Bitcoin-related mentions on crypto social media when we compare it to the amount of mentions of other top 100 cryptocurrencies, right? So essentially, is Bitcoin social volume rising or declining relative to the rest of the crypto market? And very clearly, we can see that it is in fact increasing quite rapidly. So the share of Bitcoin related mentions or Bitcoin related discussions is now at about about 28%. So more than a quarter of all discussions that we collect data from are now about Bitcoin and Bitcoin's correction. So the correction is on everyone's mind. Last time that we have seen this type of a spike, I think it was that June 9th correction or June 9th bottom, where there was a pretty significant or sizable uptick in social dominance. Yeah, there we go, right there, coinciding with a local bottom. Now, obviously, this doesn't mean that we can't see further correction. It just points to the fact that at this point in time, a lot of people seem to be talking about BTC. And previously, historically speaking, we have seen times, not just on June 9th. If you look at what is that, I think March, sort of end of March, that a large correction there. There we go, right there on March 24th. There was another time where Bitcoin social dominance was starting to pick up right as a local bottom occurred, right? And we saw a beginning of a market-wide recovery. So there is some precedent to suggest that uh, as we see a divergence between the price of Bitcoin, which is declining, and the amount of chatter revolving around Bitcoin rising, it has sometimes in the past earmarked local bottoms. It remains to be seen whether this will be another sort of argument or sort of another point to support this argument. But previously or historically speaking, this seems to have been the case, right, Brian?
Yep. And what I love about social dominance as a kind of an alternative to social volume slash a supporter of social volume is the fact that it cuts through the time of day. And when I was going to bed last night, I'm on the Pacific time zone, so I was going to bed around say 11 p.m. We were starting to get these spikes despite Bitcoin rising, and I was seeing it saying that's interesting because we had been on such a long-term downswing with dominance overall since the recovery started. It was kind of a all systems clear indication that things were going well because dominance can kind of be viewed as a volatility marker, as Dino just explained. And all of a sudden, we're getting this big, not big, but at least significant compared to where we were for most of the last month or so. The spikes here were showing that people were starting to talk about Bitcoin more. It had just crossed about 52K at the time, and Solana was going off, Phantom was going off. A few pretty large cap coins, in addition to Bitcoin, were giving crypto a lot of attention that it wasn't getting during this rally here. And when it starts to get that attention and you get the FOMO crowd jumping in due to rising prices, that's a pretty good indicator that a top may be forming. And that's exactly what happened. And then when it actually did drop, that's when we got the even larger spike, which was pretty much the largest spike we've had since about a month ago. Yeah, about to the day, a month ago. And right now it's a very polarizing subject, Bitcoin is, and we're going to have to see whether dominance continues rising or starts to fade down. If it fades down, then whatever direction Bitcoin is going in, that's kind of the direction that traders are accepting. If crypto starts moving down further and dominance gets higher, that means that there's a lot of buy the dip enthusiasts who are looking to use it as an opportunity to get in at a low price. So very important metric to keep an eye on.
Right. Okay, I think that's gonna do it for us here, guys. In general, these types of things happen every now and again. They have happened previously in the last year as well. These large sort of liquidation events that seem to skew the data quite a bit. Overall, there hasn't been a major impact of the current correction on Bitcoin's on-chain data as of yet. Whales are not moving their bags. They don't seem to be panicking at this point in time. The supply of Bitcoin on exchanges overall is remaining fairly stagnant. So there's no like network-wide or market-wide sell-offs that we're seeing at the moment. I have written about Bitcoin yesterday. And the fact, and I'll link to that article in the video description of this video, where where I talked extensively about Bitcoin's general network activity and how it has actually been moving quite in the positive direction for the past month. And that still remains the case. Bitcoin, the amount of addresses interacting with Bitcoin continue to rise. The amount of unique Bitcoin that is being moved on the blockchain has also started to pick up. So those are all fairly positive fundamental signals. So from a fundamental standpoint, not a lot seems to have changed from yesterday. On the side of social data, we are seeing a expected uptick in both social dominance and social volume of Bitcoin. Like Brian said, historically speaking, there have been markers. These have been markers of local bottoms sometimes. We'll have to see if that's the case once again. Obviously, this is in no means financial advice. Just this video is purely for informational purposes. If you want to find out more about where we think Bitcoin is at the moment, check out the link in the description of this video to my full weekly pro report that I wrote yesterday. And yeah, we'll be back in a couple of days to talk about the general state of the market during our Friday calls. Until then, thanks for tuning in, everyone. Stay safe out there.
Awesome, Dino. Appreciate it. Take care, guys.
Bye, guys.